This is the Tax Platform informing the nation on tax matters. Welcome to another episode of the Tax Platform where we decipher different tax topics. In this week's episode, we look at taxation of manufacturing entities. Now, just like mining or diamonds, this is one of the special industries when it comes to taxes. They are treated differently from other industries because the government is trying to encourage entrepreneurs to go in this industry. So there are some tax incentives that are available in this manufacturing industry. So if you are into manufacturing, you can actually apply for an approval order such that your tax rate can be reduced from the normal 22% to 15%. The 15% is a general rate for the manufacturing industry, no matter where you are. But if you are in a Sepedu area, that is in the Lesilibe Pico area, or you are in an economic zone that is dedicated for manufacturing, the rate can go as down as 5%. So manufacturing entities enjoy those incentives. Instead of paying at 22, they pay between 5 and 15%. And remember, for SEZ economic zones and Sepedu areas, the 5% is applicable for the first 5 years of operation or first 5 years of approval of such rate, and then from the 6th year onwards is 10%. So you're still getting 12% benefit over and above other industries, and a 5% benefit over and above other manufacturing entities in different locations. So how do you get this order? You apply to the Ministry of Finance. You detail the process of manufacturing, what product you are manufacturing, and then they give you the approval. Also in the form, there are issues of how many people have you hired or are you going to hire, during what stage. So you just detail how your business is and what it does, the amount of capital that you are going to invest, and then you submit there, and then they assess, and then they approve the rate. Normally it's just a straightforward thing, because you will know how much capital you need for manufacturing and how many people you are going to need or you have employed. So it's normally a straightforward application with no hassles. Both whether you are in an economic zone or you are in Sepedu, or is just a general manufacturing company in different areas. And then over and above that, there is what you call an industrial building. So an industrial building, it's a building according to the Commissioner General that is used for manufacturing, among other things. So you can get this building whether you are renting it out or you have constructed it to get it to approved, or you have bought it to be approved as an industrial building in the first year of usage. So generally, buildings will get 2.5% annually as a capital allowance, but you can apply for this building to be approved, and on the first year you get an accelerated rate of 25%. So the more the capital allowance you get, it means it reduces your profits. So this is another advantage that manufacturing entities has over other businesses, because for other businesses the rate is just 2.5% for buildings. So that means you will deduct 2.5% in the first year, going up to the very last year of depreciating that building for tax purposes, while you get an incentive in the first year of that 25%, which can be a lot for most of the businesses, especially as you need a lot of capital outlay at the start when you are a manufacturer. So it is very helpful, and that's why the government is encouraging for people to go into manufacturing because of sometimes it is capital intensive. Yes, hope that was insightful. Remember, you've been listening to the Tax Platform, informing the nation on tax matters, and we are available across all your favorite podcast platforms: Spotify, Apple Podcast, Samsung Podcast, Google Podcast, you name them. Keep on listening. Enjoy your day.